Welcome to our exhilarating masterclass adventure at Trade the Fun. You see, every week we embark on a journey deep into the heart of trading. It's not just about charts and numbers, it's about mastering the art of the market response and pure price action. Today's session, well, it's certainly lengthy. It's nearly 2 hours. But inside of that 2 hours, it's packed with insights, strategies, tips, techniques, showcasing our dedication to transforming you into a savvy trader. But hey, we're more than just a group of experts sharing wisdom. We're a vibrant community of traders riding the market's waves side by side, live, day in and day out. And in today's deep dive, we're unraveling the core of our trading ethos, the whys and hows of our craft. We're going to unpack the nuances of price action, breaking down our daily tactics and tips, and revealing to you how they play out across multiple time frames. Whether you're a scalper, a swing, or a position trader, you need to know this information on how the market moves. Now, I must say, while we do have a lengthy session ahead, every minute is a golden nugget of trading know-how. Whether you're just starting out on your own personal trading journey or you're a market veteran, this masterclass will be your go-to. You'll want to save this, bookmark it, and like it so that you can come back and watch it over and over. And I got a little secret to share. My personal game-changing strategy is interwoven into this, and you'll see towards the end of this video how it just all comes together. So stay tuned because this could be the turning point in your trading career. But before we jump in, remember to hit that like and subscribe to our channel. We host these invaluable trading sessions once a week, and you definitely don't want to miss out. So buckle up, let's learn to trade, let's learn to grow profits together. Welcome to Trade the Fun, where every click could lead you to your next big win.
We're going to start from the basics, right? And if I was just a brand new trader, starting out, let's first answer this question. And I would love to get your guys' thoughts on it. Why? Why would you tell somebody to start trading? I love it. Curtis says freedom.
Ability to work from home
Oh, I love that.
or
So
anywhere.
it does get
Home
freedom, but
anywhere when you're in an RV or
so
how-
home office, wherever you call home, right?
Yeah.
So these are the reasons why. Now let's talk about why not. Why would you tell somebody stay as long as you can, stay away? Risk adverse. I would agree with
If you have anxiety,
that.
this is not for you.
That's true. So if you suffer from anxiety or something like that, probably, or I don't know what it's called, fear of loss, I would say if your why is just for the money, you won't be able to last very long, right? Yeah, if you're doing it for get rich quick, right? So, all right, thanks guys. I appreciate that. I was just gonna I kind of want to throw that out there to see what you guys would say, right? I knew what the basic generic answers were, but so now let me ask you guys this. Again, on the journey of I'm just starting out. So I'm brand new trader here. I'm a brand new trader. I'm just starting out. There are multiple ways in which one could trade. So what are the different ways that you guys can think of? That's generic, just basic generic. And I'm going to give you one of them because we all do it. And that's scalping. So scalping is just taking short-term trades, getting in, getting out, getting done, right? And that's pretty much 90% of what we do here in the mornings, right? Okay, and then you have
Dave,
swing trading.
Would you classify 3 and 50 strictly as scalping, or is it modifiable across several
Well,
techniques?
stay tuned because that's what I'm getting to.
Okay. I just gave you the answer.
Yeah. Okay, so you got swing trading. You got
Position or long term.
short, intermediate, long term.
Is the
I call it
difference
structure
whether
trader.
you're in overnight, just like overnight and out, or if you're taking like a weekly position or a monthly position?
Yeah, that's what I was just trying to say. It's like if you're a short term, you could be a swing, or if you're mid-term, you could be a day, right? And then if you're long-term, you could be a position trader, right? Anything else? I mean, Josh has on here fundamental, absolutely. Arbitrage, yeah. So we can put them here. So why did you guys? Why almost everybody here has decided that they want to align themselves to this model. Why? Why do you guys, when you trade, unless you don't, but majority of the people here, when they trade, they align themselves to the scalping model?
You can make money in a short time.
And I would say, for me, anytime that you don't walk away from your trades and you sit and you watch them, then you're scalping. That's, so even if it's like 8 hours and you're not moving away, you're scalping, right? So I mean, yeah, so Robin says you can make more money.
Actually, the short-term goals.
I don't know if
I can see the profit quickly.
you can stack the profit. I don't know if you can make more money, because it just depends on your position size, right? So if you're a swing trader and you're trading like 10 lots and you're a position trader, but you would never trade more than, or you're scalping and you never trade more than one lot, you know what I mean? So I think it just depends on your position size for the opportunity for money. And scalping is an addiction, right? I mean, trading in general is an addiction. And I don't mean that it's a bad addiction or a good addiction, but it is it has addictive properties, because it's very, 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 very close to gambling, right? Because you can see immediate gratification, you can get immediate results, and that is the addiction, right? When you immediately come in and you make $100 for your very first time in like 5 minutes, right? That is what the addiction starts to happen. Then you stack it and you stack it and you stack it. And then all of a sudden, 1% or a 1/4% doesn't move the needle for us, right? And we want more, we want more, we want more. I've seen it so many times where at the very, 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 the traders are very, very, very successful when they start trading. You are. I mean, that's when you don't know anything. When you don't know anything to screw it up, you're pretty successful, because you have no expectations, you don't understand anything, and then when you start to pour in, oh, I've already done this, it's no longer exciting. Then trading becomes very difficult, because now we think we know what we're doing, but we really don't. So we jump into scalping because it has one of the most addictive properties. But really, we need to take a step back and say what scalping gives us is a baptism in education. What Josh says is it gives us the fastest way to educate ourselves. So gives us the fastest way to educate ourselves for price action for the 3 and 50 model, right? And that's what I'm teaching. So it's so much easier to see this 3 and 50 model work in a 1-minute environment, because you don't have to sit and wait and wait and wait. But the principle of price action stays the same on no matter what time frame. So learning how to trade price action, learning what the fundamentals are, is what you can do on the 1-minute chart and get that education. Then you can take that out and expand that into a much wider view, right?
It's fractional.
Yeah, exactly. So, and I want to look at that for a second, but I'm not saying that you should or you shouldn't pick one of these things. I will say, it's kind of funny because I've seen brand new traders. My whole career, my upbringing was that I always got to was in the very beginning when I started to teach other traders before I became like an instructor. I was always on the orientation webinars, right? Helping people, the new trader orientation is what we called it. So brand new traders, we would orient them. I would teach them, you know, how to get started, all that kind of stuff. And without fail, new traders would outperform traders of, you know, 2 to 3 years in. Why is that? Anybody have any idea why new traders would outperform maybe your average, not your best traders, but your middle of the road traders that were funded, all that kind of stuff? Anybody ever thought that? Anybody have any
They-
thoughts to that?
They haven't been hurt yet.
They haven't been hurt.
They follow the rules.
No,
They
follow
tend to
the
stick
rules.
to the rules. They're coachable. They're coachable.
They're coachable. So when does that all change? How do
Soon
we
as you-
develop bad habits?
As soon as you think you know what you're doing.
As soon as you think you know what you're doing. And I think you said a big one. I think you said a big one right here. And he brought in the word greed, right? And greed manifests in all different forms, right? It doesn't mean that, you know, you're greedy, you're going to go out there and say, I'm going to make $1 million today. No, what it does is I personally believe that it masks itself in complacency, right? Because I have never, ever been a part of an industry that doesn't accept, you know, 1% as a good week. A 1% increase on your portfolio as a good week, right? Can you guys tell me any other industry that doesn't accept a 1% increase as an awesome week? Anybody? That's what I thought. You guys are all scared. So now, why is it almost like frowned upon or not an accomplishment that we celebrate if somebody says, I made 1% this week? Like, people don't even push that forward. They're not going to advertise that, oh, all I did today was 1%, because they think that's not good enough. Like, we don't celebrate that in the training world, right? I'm not, if I put out a video on YouTube that says make 1% in a week trading Forex, nobody's going to watch it. Nobody's going to watch it. So why is it? Why is it that we do that to ourselves?
People here, you know, like 20%, like in stocks. Oh, it's up 20% over a year, right? So that's what they like, the double digits. So if you say 20% a month, you know, because it's 1% a day, right? Or you know, 40% a day, just 20% over 6 months, people gravitate to that.
In the Forex industry, but if you said that in anything else, any other industry, you'd get laughed at. Would you agree with that?
Agree. It's just the it's the same concept, right? 0.25% a day. It's just that if you play the higher numbers, people gravitate because that's what they're used to seeing in advertising.
Yeah, well, that's because they're feeding that greed, right? The advertising is feeding the greed, right? Nobody's gonna. But then what we do know is that this is very difficult to do. Would you guys agree with that? Would you guys agree that as a level 1 trader, let's just put it in the world of level 1 trading, as a level 1 trader, 1% a week is very difficult to be consistent with, right? That marketing companies put all the flash and the glitz and everything in and say, you know, trade with us and you're going to get, you know, $10,000 in your first year of ever trading, right? And honestly, that's like, and I bring that up because this is the most recent pitch that I was pitched. When sometimes I go through other companies and see what they're doing, and the last one I remember was I was pitched 10 grand a year, and if I didn't make that 10 grand a year doing their program, then my second year would be free, right? And so they were basically saying to me that they guarantee that I would make 10 grand, my money back, basically, or I wouldn't be, or I couldn't, or I didn't have to pay for any more education through them, right? So, I don't think I would, in good conscience, be able to tell somebody that if you've never placed a trade, we're gonna make 10 grand in the next 6 months or the next 12 months. Why do you guys think that as an instructor, I would feel uncomfortable saying that? Or it just on YouTube, I'd feel uncomfortable saying that, right?
Not all 1% are equal.
Well, you can't
I'm
get
not
someone else's actions and consistency.
exactly my point. I cannot guarantee somebody else's actions. I cannot guarantee that they're going to put in the time, effort, energy that's required to get your education that you need in order to do that. Honestly, I was just having a conversation with Pete about this the other day. And he's a great example of this. And you guys probably all fall into this category. I'm just going to say it just to say it, but there's probably a bunch of you guys here that fall under this category. Pete has been trading. I don't even think if he's here or not, but if you're here, I'm going to talk about you so you can defend yourself. If not, even better. He is a 3-year trader, right? He's only been trading for about 3 years, and he hasn't been doing it as much as he's as much in really until he started jumping on with us, right? He wasn't doing it every single day, not putting in the time, energy, and effort until basically probably about 6 months to a year ago. And all I'm saying is that this is when he decided that he was going to put his time, energy, and effort into doing it every single day, right? And he is a classic example of this. But even still, he also will admit that his trading didn't take off. And he has admitted this on one of his on his last Wednesday night class, that his trading didn't take off until he had that aha moment of when I stopped the live trading. We were live trading, and I said, hold on, whoa. Do you not understand what a KPI is? Right? Do you not understand what a KPI is? Or basically, at that point, it wasn't called KPI, but do you not understand market structure? Right? And I was like, well, I thought I do, but we had to pinpoint this point. And that's when his aha moment happened. Everybody's aha moment is different, but that's when his aha moment happened and his trading took off to the next level. That honestly is what scalping will give us, is that opportunity to have those educational moments really quickly, right? Is to look for those aha moments that could get your trading from one point to another, right? And just coming back to the conversation that everybody has, it happened again, and it was more evident that it happened again with Pete. So when Pete started trading with me, it happened with Pete, it happened with Josh, it happened with a lot of you guys that are doing the fast track classes, the hot seats. The fast track hot seats just recently, as of last week, we've had new people in the fast track hot seats. This happened to all of the old hot seaters. And I'm going to ask you guys this question, that even if they've been trading for multiple years, 1, 2, 3, multiple years, the moment that I put them into the hot seat, they're new again. They're making new mistakes. Pete,
Yes.
with trading for a couple years, and he still didn't understand what PTP was. 6 months in of trading this style every single day, he still didn't understand what a KPI was. Right? And I'm here to tell you guys that even though we trade the way that we trade, I make more money. I'm going to do this, but I'm going to look and see how much more money that I've made on my overnight stuff versus versus just I already know that it's going to win on overnight. Just I know that versus just coming in and trading with you guys making 0.25%, 0.5%, right? On my overnight trade setups, I probably average double what I make during the 2 hours that I trade with you guys, right? Why is that? Why do you guys think that is?
Market runs longer.
Less reactive.
Okay.
Mistakes. You're not there to mess up the trades.
And maybe it's our bots.
I think when you're trading the longer time frames, you get a higher return.
Maybe. But I think me getting probably hit the nail on the head is because I'm not
Messing with it.
I'm not messing with it. Yeah. Right. And yeah, I mean, me personally, I can make more money in an 8-hour window of trading than I could make just letting my overnights run. Right. Because I would have a lot more trades on in 8 hours than I would in overnights. But what happens when we try to trade, and we try to scalp, and then all of a sudden 1% is not good enough, or a week or 0.25% is not good enough. And even with the challenges out there, you guys are like, well, I can't make 10%. I can't make 10% in a month. And I can't make 10% in 2 months. I can't make 10% in 3 months. Right. And once I take a loss of, this is probably where a lot of you guys are at right now, is you're buying a $10,000 package. You're making 0.25%. You're making 0.25%, and then you lose 2%. Would you agree that some of you guys are right there? And then
Yes.
now you're like, I'm making 0.25%. And these 0.25% don't match up to the loss that you just took. Right?
Yep.
And that's where a lot of you guys are at right now. And I've said this so many times. And I say it every single day, but it amazes me. And I'm just going to call you guys out for a second. I'm going to call every single one of you guys out. It amazes me for how many times I've said it every single day that I have to actually get you in the hot seat and say, this is what I've been talking about every single day. And they're like, oh, that's amazing. I've never heard you say that before.
Mind your business.
And I'm not calling you out because you're not listening to me, because I get it. On the other side, it's very difficult to listen to the instructor and trade, as it's even more different to instruct and trade. And I get it. There's a lot of things that are pulling on your attention, but this is something that I've said every single day before we even start trading. And I even have a slide that's dedicated to it so that I talk about it every single day, and that's overnight trading. Right? Particularly for the skill set that we have here. I know your guys' skill set predominantly because I've worked with a lot of you guys. With the skill set that we have here that has a tendency to, on the scalping side of things, you have a tendency to get in your own way and mess it up yourself, right? Because you're not new. You know better than to make new mistakes. And yeah, but yet you still make those mistakes, right? And I think that our trade, actually, some of you guys, and I'm gonna probably ask Josh if this is true and correct. But Josh, do you trade differently? Do you trade differently on camera than you do off camera?
Yes.
Okay, and why is that?
Because I've actually analyzed that quite a few times, especially in the last 3 or 4 months.
Mhm.
Initially, before I recognized that I was doing it, it was, well, I figured this out. I don't need to follow the rules so much. I can kind of do what I want because I figured this out, right? And then the market bites you. So you go back to the rules. But there's another piece to, I guess, my evolution as a trader. You could doll me if you like. The rules are there to create a guide
Mhm.
for how to enter the market, exit the market, and manage your position consistently. They are not necessarily gospel. In other words, if you place a trade on a 3-bar reversal every single time, 100%, you're going to make money. That's not how this works, right? There's
Right.
context around the market and around the day and around the structure and around the time. There's context around every piece of the
Yep.
chart that you're looking at every second. It changes constantly. So as you evolve as a trader, and I guess is where I'm speaking for myself, as I've evolved, I see the context from an experienced perspective. Like, I've experienced this context before, so I know I can get heavier here. Or I've experienced this context before, I better get out because it's about to
Right.
bite me. So you begin to alter a little bit based on who or your skill set as a trader as to how you trade. So that part I will not typically do on camera because you're not supposed to do that. That's not the rules. It's not,
Mhm.
and it'll mess a
Yep.
new trader up bad because it's like,
Yep.
well, you say buy on a 3-bar, but you just sold, Well, then you got to go into a 4-hour explanation about the context of the markets.
Well, and then you have other variables, right? That when you're by yourself versus on camera, you have other variables that creep into your psychology, such as, is this a live account or a demo account? And I don't care who you are, you trade those
Yes.
accounts differently. You
Yes.
just subconsciously you trade those accounts differently. And I had no better proof of that than last Friday. All right. Even though I'd like to say that I'd like to say that I don't trade demo accounts and live accounts differently. I totally traded differently on Friday in a demo account than I would. And I even called myself out on it on camera. And I was thinking about because I ended up I wouldn't say taking a drawdown, but I cut my profits in half on Friday in a demo account because I was willing to let them go because it was a demo account for risk reward. I'm like, I don't care if I lose it, but I want to see if it'll actually just go above this. And it didn't. But before I even started talking about it, I said, this is where you get out, even if you take a loss, because this is where the market's going to turn and it's not going to, and it's going to go against you. And I didn't get out. And I was thinking, why didn't I get out? Even though I was telling everybody this is where you get out. And the answer came to me as clear as day, is because it was a demo account. And I wanted to see if it would just take one more reach up. But had it not been a demo account, I would have protected all of my money and gotten out and flipped into the direction that the market did eventually go. And so I'm like, we trade differently. We trade all these subconscious things that we don't even think about, right? All these different elements that, guess what? Where do they come from? Where do those subconscious elements come from that we have to fight through? Every single trader has to go through this.
Pain.
It's pain, right? You're
Humans
right.
learn best through pain.
We do. Unfortunately, those are the best motivators, right? Is fear is one of the better is the better motivator than greed, right? Unfortunately, it is what it is, right? Pain is the best motivator. And the market, when Brer says the market, yes, Cincinnati is wrong. The market is the worst teacher in the world because it will reward you for bad behaviors and it'll kill you for something that you know is right, like following the rules, and then all of a sudden you'll take a loss. And you're like, well, why did I follow the rule? Why didn't I just not follow the rule and I could have made money? Right? Because, and that's where that, my friend, is when you have a conversation with yourself about that, you've just transitioned from new to experienced trader.
Well, like in the middle of that is strategy hopping and all kind of mess.
Yeah. Once you have that conversation with yourself and like, why that was the rule that I did, but now what if I break that rule? Well, welcome. Now you just leveled up into experienced trader, right? So Gus, going back to, and the reason why I say that is because you know what the rule is. And so you know that you just broke that rule. And that's why the market is the worst teacher, because sometimes it'll clearly defy and break all the rules out there. Like in a market today, it has a high likelihood of doing that. That's why we don't trade markets with that's difficult to trade it with non-news events during the holidays when you have lack of volume, just when the banks are closed. It just makes it that much more difficult to pull profits out of the market. And so you're better just to tend to avoid markets like that, right? Again, that's an experienced trader talking, understanding what the 3 and 50 is and what it represents, right? The 3 and 50 is not a technique that you just use. It's not a scalping technique, right? It's not a strategy that says, do this if this, right? It's not a strategy. What it is gives you the ability to read price action. So we always talk about the 3 R's. It gives you the ability, quiz time, what are the 3 R's? Anybody who's been here for a while, what are the 3 R's?
Read, react, resolve.
It's like it's not RRW. Read, react, resolve, then whiskey.
Whiskey is a subset of all 3.
I got it. And that's what I'm going to kind of show to you guys today, right? I'm just going to give you the breakdown of what the 3 and the 50 stands for and what it is. Just a quick overview. And then I'd highly recommend that everybody has access to taking the course, take the 3 and 50 course, because it breaks it down. The 3 and 50 course goes over at level 1, level 2, and level 3, and how each one views the market, right? So as part of the 3 and 50 course, the 3 and 50 course teaches you that there is support and resistance areas. It teaches you that there's action points and what are the 3 things that you do at action points, right? It teaches you what your price cycles are. And it teaches you that what you do if the market moves 3+ price cycles against you. It teaches you how many times an area on a support or resistance moves. It teaches you how many times it touches it and what to do on the first, second, and third touch of a ranging market. It teaches you how to identify the 3 types of markets that are out there. So the market structure. It teaches you so that you can start to understand how the market moves, right? That's a level 1 trader. Adds the 3 and 50. It teaches you how to recognize the pullbacks of the 50%. It teaches you how to recognize a failure of a 50% and what you do on that failure. It teaches you all of these things so that you're ready for level 2. Now, for those of you guys who know how would you guys define a level 2 trader?
You can trade without take profit limits. You can do winning while losing, secure your trades, winning while losing, like pick and pop.
Thanks, Cliff. I know that I can always count on you as a phone a friend. You have all the answers, and I don't mean that jokingly. You literally have all the answers, and I love that. You've written enough notes, and you have all the answers. So I love that about you. As a level 2 trader, we take this knowledge and we start to screw it up. As a level 1 trader, we take all this knowledge and we start to screw it up, right? Because we start to be like, well, the market, I know I did this, but then we start to add in and we start to skip and we start to make up our own rules. As a level 2 trader, you're starting to recognize that you did this. You made up your own rules, or you skipped the rules, or you you broke the rules, and you start to recognize that. So as a level 2 trader, you start to bring back in, if the rules are not working, can I recognize that? Meaning, if it just blew past the 50% without even saying hello and stopped, and you start to recognize that, well, the rules aren't working. The market isn't behaving. So I need to just either get in, get out, and get done, or I need to change the different technique for the type of market that we're in, right? I'm not looking for a range. I'm looking for a ride the wave possibility, because we got the 0, 1, 2, 3s that are happening, and that looks more like a ride the wave than it does, right? And so we start to recognize what rules the market is telling us so that we can work within the rules of the market structure. As a level 2 trader, we're starting to understand what it looks like to take a loss, right? So we're starting to look like that, hey, I cannot carry my losses beyond this point. Here's my get out of loss cards, right? And that's the same thing. I'm trying to tell you guys, this is the same thing, whether it's on the 1 minute or the 1 hour. Now, I'm not going to teach beyond the 1 hour, but it's the same thing. And the only reason why I either will do the 1 minute is during our 2 hours of trading session. The 1 hour is what I look like for overnight, right? But it's the same concept, whether or not you're doing a 1 minute or overnight or even trading for the week. It's the same concept of knowing where your action points are. If it crosses this KPI, I need to be out, right? If it crosses this area, this is where I need to take my profit. This is max profit, all that kind of stuff. So as a level 2 trader, you've now identified what the rules are. You've now identified that I'm breaking those rules. And now I need to get back to fixing when it happens when I break those rules, right? And so we take a loss. How to avoid taking your losses into uncharted territory where you don't need to, and then how to understand the psychology of it, meaning that if I have a loss down here and profit up here, I need to peel this loss off because it's hurting my psychology, right?
So we
Now we talked a little bit about the level 2. Now we mentioned this on Friday, a little bit about the level 3, and I'm just going to introduce some level 3 stuff to you guys, because I've heard this before. The reason why I don't sit and teach you guys a lot of stuff about level 3 is because I'm trying to teach you guys level 1 and level 2 stuff. I have no problem teaching level 3 stuff to people who are level 3. And somebody made a comment of like, we're all adults here, you can teach us that. But the problem is that it's not a matter of whether or not I want to teach you, because I do. It's a matter of, it might get really confusing if you don't have the right building blocks in place, right? If you don't understand what an action point is, then you have no business really learning when and where to put level 3 trades on. But as a level 3 trader, you work through, you understand what trading is. Most of you guys are not level 1s. Most of you guys are still focusing on level 2. But I will say, a lot of you guys probably still have level 1 issues. That's what gets me excited about these hot seats that we do, is that I can pretty much pinpoint your issue within the first hour of trading. Well, here's your issue, because I've seen it before, right? And I would probably venture to say the majority of you guys who think you're a level 2 trader are probably making level 1 mistakes, and that's what's causing your inconsistencies. But until I actually see you trade, watch you trade, I don't know what those are. And it was clear as mud, or it was clear as day last week when both of the Tuesday and Thursday traders on what the issue was. And on the Thursday one, not calling out on the Thursday one, we had hit gold multiple times during that session, but the trades were never closed out when they should have been closed out. And that's a level 1 technique of knowing where your max profit is, right? But until you get in that situation, you don't know. You don't even know that it's applicable to you until somebody points it out. Sometimes we cannot see our own weaknesses until somebody points it out, right? So, all right. So as a level 3 trader, risks out should be few and far between, because you understand when to take these losses, right? Should be few and far between. And I'm talking like, as a level 3 trader, you should be risking out. I'm not going to put it to my level, but I probably say if you're scalping and you're taking on a scalping, I'd probably say you should probably be risking out once every probably every 30 trading days. So every month and a half. So every 45 days, you'll see a risk out. Now, what a risk out is not a 5% loss. Okay. It's not a 5% loss. A risk out is you'll just get to the point where you're plan C'ing it, or you hit a plan C, right? Because you traded a market that just gives you that. And as a level 3 trader, you're hitting your plan C, you're cutting it, and you're saying, I'm done trading for the day. I'm going to take a risk. I'm going to just take an L on that session. I'll come back and fix it in the next couple sessions, right? And I still do. I don't remember the last time that I've taken a loss that I couldn't fix. I don't remember the last time I've taken a loss that I couldn't fix in my account. And the last time that I took a loss, I was a really bad loss that I took. And it took me 2 days to fix it. And that was almost a year ago, right? It took me 2 days to fix it in my personal account. And that was a time when I just got caught on a 150 pip move within 5 minutes, right? So it's basically, you can't do anything about that, right? And those are markets that just 150, and it hit my stop loss, got back in, hit my stop loss again. And I was like, oh boy. But I knew that the response was coming, but it took 2 days for the market to respond. And so it took me 2 days to fix that, right? And that was almost a year ago, just coming up on a year ago, when I took that loss personally. Now, do I take losses? Yes, I take losses every single session.
Mm-hmm.
So as a level 3 trader, I would probably say you're risking out, or you're plan C'ing about every 45 days, because sometimes the market gets you. And there's plenty of times where I wait, where I'm trading in that session and I'm like, okay, I'm going to fix it the next session, or I'm just, the market's not talking to me. I'm just going to close out and come back in the morning or whatever, and then fix it in the morning, right? If you are at a level 3 stage, I'm saying that you are controlling your own risk. And that's the conversation that some of you guys are having right now. Some of you guys are having those conversations of, how do I become my own risk manager? What is my own tolerance level of how much I'm going to risk during this trading session? And I would probably venture to say that those of you guys who are only trading apiary, you didn't have to worry about this piece. You've never been asked this question. How do you become your own risk manager? Because that risk manager piece is taken out of your hands, and it was driven like, well, 5%, and you're done trading for the day. Oh, I gotta wait till tomorrow. And so this basically became your risk management, was 5%. Now, how many of you guys let it go to 5%? Right? Well, I would hope that nobody lets it go to 5% anymore, because we just cut it. We just use the tools at our disposal, Talon and Anubis, to just cut it, right? But before, 5% wasn't a big deal, right? Because you just wait 24 hours and trade again tomorrow. And so that was again, a really bad teacher. And now you're being asked the question, how do I become my own risk manager? And you've heard this so many times, that you should never risk more in one day that you can't make up in two. It's still a great rule of thumb. And on the journey that I've been taking you guys on with the hot seat, we started at how to make 1% a day in any market, any condition, anywhere. I still believe that this is a level 3 skill set. You should be able to make 1% a day in any market, any condition, anytime, anywhere, as a level 3. But all that means is that if you can do 1%, then you'd have no business risking more than 2% in a single day. But if you can't make more than 1% in the trading account on a average day, then that 2% as a risk manager becomes something that is not something you should plan. That this is not plan C, right? This is not plan C at 2%. So all this comes down to, as a level 3 trader, is that you understand your own strengths, your weaknesses. You understand your trading inside and out, to the tune of, I can consistently make X. And when I am faced with a market that is inconsistent, then I plan C. Right? Then I plan C. And that's really ultimately what a level 3 trader can do. It's not that all of a sudden you're going to go from making 0.25% to 5%. As a level 3 trader, you understand what your limits are. You understand what you can do. And hopefully that is expanded. Hopefully that is expanded from what you used to do. So if you over here as a level 1 and you're barely struggling to make 0.25%, well, hopefully as a level 3, the 0.25% becomes easy, right? 0.25% a day becomes easy. And that is honestly where I'm living right now. Is 0.25% is super easy for me. But I still take it. And what I mean by that is, I still take it. If that's the only thing the market's going to give me that day, I'll take it, because I'm timesing it by 4. And that also moves the needle for me, right? The timesing it by 4 moves the needle for me. And my barometer, this is my barometer, that if it takes me an hour to make 0.25%, this is a personal barometer. is I have a time frame, and I'm asking you guys to put this together. If it takes me a 1/4%, if it takes me an hour to make the 1/4% in the market, then that's not typically a market that I want to trade in, right? And I'm pretty much done trading for the day. But if it takes me less than 30 minutes to hit that 1/4%, then I hit that 1/4%, I take it and I go into group B, and then I go to group C, right? And I try to get all 4 of my accounts done within a 2-hour trading session, right? And so I'm really hitting 1%, but I'm breaking that up into, 16 accounts. And that's what I truly love. It's what I truly love when I'm trying to get you guys to get to the point. I don't care what this is anymore. Where a year ago or 2 years ago, before I brought in the prop firm, I was shooting to maximize this in one account. My trading has completely changed, and I'm never going to go back to this model. Even if prop firms dissolve, I'm still going to be trading multiple accounts. It's just what you should be doing, right? And so I love this model, to where if I can make 1/4% in 30 minutes, I'll move on to the next one, next one. And that feeds me. It completely feeds me, to where I don't need to sit and make 10% in the account. Now, the times that I do hit, 5 to 10%, now it's because of my overnights. It's because I get in and they just run. It happens, and it happens more often than you think. It happens maybe once or twice a month, not the double digits, but when you're making more than 2%, it usually happens once or twice a month. But you just catch a good overnight run, right? And you wake up and you're like, ooh, candy, right? Or Christmas. So now let's just jump over to the charts, and let's take a look at the different time frames. So what I'm hoping that you guys are getting right now is that there are multiple ways to trade. You don't have to trade one specific way. There's not one way that's going to be successful for you, for me, for everybody. But scalping, in my opinion, on the 1 minute, will teach you everything you need to know in order to trade larger time frames. And let's go ahead and look at that really quick. And the larger time frames, in my opinion, if it's done correctly, can yield more money than this can. However, you can hit a 1/4% faster than you can here, right? There's no way that you're going to hit a 1/4% in 10 minutes on average, or 20 minutes, or half an hour doing this. But people do this. This, I think, is an important concept talk to go over, because people will hit this in scalping. They'll hit a 1/4% in 10 minutes. And what happens? What do we do on the days that we hit a 1/4% in 10 minutes? What do we do?
Give it back.
But
We give it. Why?
keep going.
Because we don't close the account.
Yep. But what happens if what happens if we make a 1/4% in 2 hours? It takes us 2 hours to make a 1/4%.
We stop.
We stop, and we're happy about it, aren't we? Every single one of you guys do this. And at some point, you know, if your brand spanking new, you haven't had, but at some point we do this, myself included. Every single one of us is like, well, that was easy. Now I can go for more. Well, that was easy. Now I can go for more. Right? That's the first thought that we have. That's why, and with scalping, the power is in the stopping. I've said this before, but the power to trading is in the stopping. That is what I love so much about multiple accounts, is because I can stop trading that account and I can go to another one. And instead of saying that was easy, I can go for more. I can now say that was easy. I can now trade another account. The power is in the stopping, right? And until we can recognize that, and until we can understand that the power is in the stopping, we're going to be continually fighting the market. That's just as simple as that, right? You're going to be continuing to fight the market. And if we can stop and take that money and put it in our bank and it moves the needle, then why do we need to keep going? Right? You've heard many, many people say this, and I'm not the first person to say this, but if you really do adopt the powers in the stopping, then the next logical thing to adopt is that trade for income. Invest for wealth. Do not think that this Forex market is going to make you wealthy. Trade for the ability to pay your bills. That's it. Then once you have that, then any money that you make over that, you invest for wealth. Right? If you think that trading is going to make you wealthy and you're going to be the next YouTube sensation with the Lambo and the pool and everything, I guarantee you that if they didn't rent the place and they actually owned it, they probably made more income investing in other things, or they not income. They probably made more money investing in other things, even their YouTube channel, or even their membership plans or whatever. They've diversified. I'm not saying they're bad traders and they're pulling the wool over your eyes. I'm saying that they didn't make it that income all from just one source, right? Or that wealth from one source. To be truly wealthy, you need to have multiple sources of income coming in. And that's another conversation that maybe I'll have with fast trackers. But I teach that you need to have 7 income streams. And I teach a class, and I haven't taught that class in a long time, so maybe we should go back to that. Somebody should have 7 income streams, and most people are like, 7? I can't even get 1. And then we go through that, and you'd be amazed at how quickly easy it is to build 7 different income streams. But as somebody that wants to generate wealth, you're not going to do it on one alone. That's why I love the multi-account, because it diversifies your risks, it diversifies all that kind of stuff, but it is still trading, right? And trading is still one income stream. And you can use this income stream to open up your others, right? And that's why the power is in the stopping. Once you can recognize that you're trading for income and you're investing for wealth, it really helps you to stop, right? And that is where everybody needs to get to, is the power of the stopping, or getting into a different account. How to categorize your increase correctly so that it's not so you get your tax benefits and your tax breaks that are there, right? So definitely we'll have a conversation about that. I was about to say something that probably would have gotten me in trouble. I'm like, nope, I'm not going to say that. Thank you, Eagle. Yes, you don't need to overpay. There's plenty of tax breaks, tax credits if you're doing it correctly, right? All right. All right, so let's go and let's take a look and see. Let's put it all together here really quick. So the power, again, the power is in the stopping. 0.25%, you pay to cover your bills, and then we generate the 7 different income streams. And I'll do that maybe this Thursday. I'll put together that class on income streams. All right. Now let's take a look at the market really quickly. So this is just a 1 minute chart right here, and we're going to look at it through the lens of the 3 and 50. Okay. So if you look at it through the lens of the 3 and 50 on the 1 minute chart, your 1, 2, 3 is we got to figure out what type of market that we're in, right? So our 1, 2, 3s every single morning is we look and we figure out, are we in a trending market? Are we in a ranging market? Or are we in an outside range? Those are the 3 things that we identify. So right here, I'd probably say that it is a trending down market. And so we would say, okay, the trend is down. Then we would be like, okay, what's our bias? And we look at our biases or market bias, and we look at the larger time frame. Is like, okay, is it down as well? We're not going to do that just because we're just going to look at this right here. And then we look at our price cycles, and our price cycles tell us what our position size should be. So we're running about 3. That it's small, but we're running, and so we're just going to look at this as structured, right? So our position size should be at 3 pips or 4 pips or 5 pips, whatever that is, every time you trade the same position size for that pippage. And if we'll go out. All right, so if we're going to trade this, let's just, before assumption, let's just say that there's enough meat on the bone. We're going to trade this. We're going to trade this. What are the 3 possibilities that this market could do? Just going with the 3 and 50. What are the 3 possibilities that this market can do? Right? It can go up, down, and I don't want to say to the right, but it can go up, down, or stay in consolidation. So it can either trade here. It can break above this and move up into this area, or it can break below this and move into this area. If it breaks above this, if the market breaks above this, I'm just going to change my color here really quick. If the market breaks above this, you're trading a channel, right? So if the market breaks below here, you're definitely in a major outside range. And so if I'm just looking at this just right here, and I recognize that if it breaks above here, I'm probably in a channel, breaks below here, I'm in a major outside range, which will force me into a ride the wave type situation. Now I'm measuring from here to here is about 8 pips. If all I have to do is go 8 pips, if 8 pips is the worst case, if I'm in a buy and it goes against me 8 pips and it breaks, then that's bad, right? If I'm in a buy, it goes against me 8 pips, breaks into a major outside range, that's a bad risk reward situation. So we don't buy at the top, but if we think it's going to buy, then we look at our 1, 2, 3s on the top and on the bottom of where it could potentially break. Then we look for risk versus reward. And we say, if it breaks up and it channels up, well, there's a lot of fixing points along the journey, these action points. But if it breaks down and comes down to here, there's not a lot of area to fix in here. So if it breaks down, my risk is greater than my reward for buys, right? So my risk is greater on buys if it breaks down than my reward would be for buys. And so we analyze all this stuff and we're like, okay, now we're ready to be like, okay, it's at the top of this range. If it breaks up and I'm wrong in my sells, I got a lot of fix-it points. But if it breaks down and breaks this area, it's probably going to come down to here. And if it comes down to here, it depends if this is the second time or the third time. It could break, then I probably want to be in sells. So just looking at this, my bias would probably be let's sell at the top because that's what we do. And let's see how many times it's touching the 3 points, right?
Question,
So
like if you're in sales,
this is the part that gets me in trouble here. I don't want to remove the white thing. So we're just going to remove a little bit of this. Okay, what?
if you're
If I'm in
sales,
sales?
right? And let's say it goes 30 something pips against you and then, you know, fake out kind of thing. I mean, then now you're reaching the next outside range. How would you fix then at that point when it,
Well, I can only tell you according to what I'm looking at right now, right? So,
okay.
and
Well,
the
I'm just
first
planning
thing
ahead because that's what happened on
well, the first thing that I do is right here is I go like, okay, so that is a 40 pip run to the top. So I'd be like, okay, but there's a lot of action points along the way. You see that? And so there's a lot of places the market should turn. And so like going back to what the market does, should do and the work, and then identifying what it's doing, what it should not do. That's the first thing I would recognize, right? Market should do this. And then if it doesn't, well, then it's probably playing in a 20% market, right? So,
right. That's what I was practicing, and then by the time I recognized it was 20%, it was too late. I'm at my plan C, and you know, minus 3% kind of thing. So it was like, how do I, yeah, you know, get out kind of thing, maybe, and then recognize that it's turning into a 20% market.
well, we did that on Friday. I didn't execute it, but we did do that on Friday to where like the market is going to come to here. If it fells this, if it fells it, if it fells across this, we're gonna have continuation. And once you can see that and then it fells, then that's your exit point. That's the only thing I can really say without really looking at the market and saying this is it, this is it, this is it. But looking at from a general rule perspective, that's where you look at your KPIs or the bounce points and you say, well, if it doesn't bounce or it has continuation, then it's going to keep running. If it bounces, then it's going to go here. Here's my max profit. And that's how you answer those questions every time they arise is you do that analysis. Where's my max profit for this run? And if it doesn't give that to me, then, oh, why not? Is it because I had my analysis wrong or is it the market being wrong? Right. And you just have to go back and reanalyze. Now, the nice thing about that is it's always the same stuff over and over and over. And so it becomes repetitive. And so that's when you get back to those 3 R's of the read, react, and resolve, because it's so competitive. You've done it so much that you can just read the market and then react to it. In this particular market right here that I'm showing you, we have downward pressure coming. So the market is starting to move up. There's nothing that says it's going to just pop up. And we'll just say, you know, as we're going to take all the outside stuff, all the what ifs out of the equation, looking at this right here, it says it's been trending down. So the sells are definitely a risk that the reward is on the sells. If it pops up, I have plenty of places to fix it, right? So, okay. So as we grab this, hopefully, this is the part that I always screw up. There we go. So we grab this and we start looking and we see how many times has it hit? How many times has it hit? So you can say this would be a 0. This would be a 1, got rejected. This is the second time that it's hit this spot. Kind of came all the way down to here, or you could say this is 0, this is 1, depending on what it would look like. But I'm probably looking at this one right here because it's also 50% of this range. So it stacks. It's fit. So again, 350, 50% of the range. It's touched this range. 0, 1 broken through, 2. So if it comes down again, we're sitting on the third attempt to cross that 50 and to stay down here. And if it crosses that 50, puts pressure on this, then that's the 0, 1 second time. And if that second is followed by a W, well, then and you could just get an outside range here, right? And that is truly the analysis of the 3 and 50. I got a 50% range right here on the 1 minute chart. So let's see what this does. It comes right there. It's coming down and boom. This slam broke back in. And so now if I'm not in any of these trades, because it broke this, I would try to get back in on a 50% pullback, which is you have that right there. You see that green line? You get in on a 50% pullback because this is 0, this is 1, and it's the second touch and it could break. So if I wasn't even in here, this is now my confirmation to get in right here. So I'm getting in on the 50, on the felt 50, and I would probably get in there and let's see what it does. Okay, so it came down and it blew past this right here, pulled back, but fell the 50 of this move. It fell the 50 of this move right here and aligned with this action point right there. So this is another entry that I would get in. And now I'm like, well, now I'm riding the wave because it failed to come back and puncture that. And now even if I got in here, which I would have, or here is a signal to get in, or here is a signal to get in. And that is just mastering the 3 and 50 technique, right? It gives you all of these signals to get in, where to get in, when to get in, and reading the 1, 2, 3s of the market. And then let's see what it does. Now I'm going to ride the wave, breaking down, and my ride the wave comes to an end once this happens because it crossed over the last candle, right? And even if I wanted to prove me wrong, I'd probably put it right here. And as soon as that prove me wrong happened, then I'm out. But that doesn't mean I'm not getting back in. If it fails to cross this or the 50% of this, I could get out of these trades and get right back in on these trades, right? If I'm thinking it's going to push lower, and this is where if it fails to cross the 50, is giving me my last ditch effort before we get another run, I'm absolutely going to get back in. I'm going to buy back in here with half of my position. And if it comes all the way back up to here, I'm going to get in with another half of my position to put my break even right here. So if this is the apex, I can get out as it crosses the break even and flip into buys if it gives me that signal. If it doesn't give me that signal, then I take my sells either in half of my position and I continue my ride the wave. Just what are you going to do, market? You're going to bounce, be the apex, or are you going to have continuation? I don't know at this point. You don't know, but I'm going to play as if we're going to get continuation because it's a ride the wave and the risk versus reward is definitely to the sells on the reward side, right? Because everything is saying down. So let's take a look and see how this trade plays out. Right here, it's bouncing back up, fails to cross the 50, gives me more of that. Now I'm like, are you going to cross this or is this becomes max profit? And if I have trades here and I put trades at the 50, or excuse me, right here's where I started my trades, I might decide that depending on my position size, right? Now I have the flexibility of what I'm going to do is if I'm going to add more trades on a pullback or I'm going to play the bounce right here. And it just depends on what the market gives me, right? So it didn't give me anything. I probably would have just stayed on these trades, not added here, and then it broke down. If that pullback right here happened fast, I probably couldn't have gotten it. But that's what I have been looking for is the first pullback and a failure at this point to add. But if that just happens like that, you don't get in, you don't get in, right? That's the disadvantage of trading on the 1 minute chart. But you can't get in because it happens in 3 seconds. And then again, it happened here, but I'd probably just take these trades all the way down to here. And then my ride the wave is over. Still not over. It's over once it crosses this with the body, okay? And I'm probably not getting back in because I'm thinking, well, it's going to turn at any point. So I'm not adding in, but I'm waiting for that turn. But I'm just taking, and I'm taking what the market is giving me, and that's a pretty good run. And now, as soon as it crosses here, I'd probably get out of that turn. You see, never crossed, didn't cross that. Still, now it needs to cross this still in order for me to get out of that trade. And I'm probably out off of this because it probably hit my take profit, but now who knows where that's going. But you see, that's exactly how you take advantage of this setup using the 3 and 50 on the 1 minute scalp, right? So let's take this and let's look at the 1 hour chart. Hopefully this is helping. So, and what I'm trying to kind of put together today is it does not matter the time frame in which you trade, as long as you understand the 3 and 50 method. You can trade it at any time frame and do the same thing, the exact same thing. However, you're going to need to do it. You're going to have 2 things that are completely different. Your position size. You cannot trade the same position size that you can on the 1 minute. And you're probably going to need to run with pending orders, right? Because you're not going to be around. So you need to run with pending orders. So the market does this, I want to get in, right? But it's the same exact concept on the 1 hour chart. It's the reason why your overnight tradings can work out and be so successful, is because you can start to predict where the market is going and where the max profit is, right? So looking at the 1 hour chart, I'm going to stop sharing and do the same thing. Just find a place on the market and close what it does. All right, so let me share my resume share. Okay, so now we're seeing a 1 hour chart. It's a 1 hour chart. Okay, the only difference is the time frame. The major differences are you're not going to trade the same position size. So you just adjust your position size for the 1 hour time frame versus the 1 minute, right? Meaning that in the 1 minute, this is just a quick and dirty conversion. In the 1 minute, if you need to go for 0.25% on the 1 minute chart, generally speaking, you need to take 10 trades to 10 pips. Right? And that's generally the position size that I use, is that 10 trades to 10 pips usually yields me about 0.25%. Right? And so doing the same math is you need to trade the position size that is basically doubled on, or quadrupled on the minute chart, or the hour chart, where you're no longer going for 10 pips. Right? You're going to be going for maybe like 50 pips. And so if we do 50 pips, well, then you need to have the same position size where you're taking maybe 5 trades to 50 pips equal your 0.25%. Whatever the market is going to give you for your overnight trade setup, right? And I'm not going to teach you guys overnight, sorry, let me back that up. I'm not going to teach you guys overnight trade setup techniques. Because that's a whole other conversation. I guess what I'm trying to teach you right this second is taking the 3 and 50 and putting it on the larger time frames, right? You're not trading overnight. You're gonna day trade or whatever the case may be. You still need to have, you just drop your position size to get that 0.25%, but you're still adhering to the 3 and 50 methodology, right? Or understanding price action. And I just did it. So that's not going to work anymore. So that's what happens when I clear my drawings. I'm just used to doing that. So I'm just used to clearing all my drawings instead of getting that eraser out. So I'm going to open up a different time frame because I just ruined that one. All right. So if we're looking at the 3 and 50 module on this time frame, this is clear back to, well, a long time ago, right? September, October, something like that. We just look and say, okay, you know what? It's been kind of going down on this shelf. It kind of hit, this could be the apex here. This could be the turn. This could be the channel that we're looking at, but it's kind of probably find difficulty at this action point. It's going to find difficulty at this action point. It's already kind of came up here, crossed that action point, and then got rejected. So we're just looking right here. Is it going to have continuation up? Is it going to come and bounce down? Now, if I'm gonna put some trades on, and I'm going to put pending orders on and all that kind of stuff, I'm going to say, this is what, ooh, I almost cleared all drawings again. Just want to clear this stuff. Leave this alone. Almost messed it up again. And say, well, this is 50% of this move. It's sitting right at the 50%. So I could either buy off of this bounce right here up to the 50%, and that's my move. Or I could put a pending order of a sell that if it crosses here, I could sell for it to come down to 100% and still keeping with the integrity of the channel if it came down to here, or even here, and take my profit here if it's going to turn here. So then that way I would just look and say, here's max profit. That's going to yield me 600 points if it comes down to there, right? 60 pips. If it bounces and goes up to the 50, that's going to yield me another 50, 60 pips there. So I would take, so if I'm like, where's my 1/4%? Well, here's a 1/4% right here. If it bounces up, if it comes down, well, here's a 1/4% between this move and that move is a 1/4%. And you don't need to take as many trades, but it's still the same 3 and 50 model. Should come down 60%, and you want your take profit above the support area. It's so that you can, you know, asking the market, hey, here's my money market. Here's the support area. You have to cross this in order to get my money. No, you want your money above here. So the market doesn't have to cross this area, and it just comes down and gets your money there, right? It's the same exact concept, whether or not you're scalping or you're doing long-term trading. Now, let's see. I would put, let's put it again. It's really tough for me to erase what comes close to there. So I'm just gonna erase this. All right. So now let's kind of see what the market does. Again, I'd probably be putting a pending order here. I'm just going to change this to green. So I probably put a pending order for a sell here. And then I probably put a pending order for a buy, like this here, and then say what the market's going to do off the bounce. Or I probably might get into some buys for some quick bounces off this bounce because of the trajectory. Again, don't trust the verticality of that. So there's a good little bounce point there. And then put some pending orders on some sells, right? All right, so where would my stops be? That's a great question. If I'm putting a pending order on a sell, my stop is right here, right there, because that is the KPI. That says if it comes down here, triggers and breaks this area right here, I'll just make red. If it breaks this area right here, then it's going the other way and it won't be out, right? That's the KPI. That's where if it crosses that area, then buys are in favor. If it fails to cross this, I want to continue to be in sells, right? So, and it's the same principle on the 1 minute chart. As soon as it crosses the KPI, you just want to be out, right? And you want to get into the other, we don't just close out everything, but we look to get reset to 0 and then flip our direction, right? So, it depends on if it triggers and then goes back up there. So if it triggers by pending orders, goes to there, you're looking at a 20, 30 pip loss somewhere in there, right? Oh, no, that was the time frame. It's covered. So you're looking at a 40, if it triggers that and then gets out of that, right? But the KPI is about 40 pips away. 38, right? Of my pending. So let's just jump into here. And now we're looking at if it did cross this, if it stays above there, it's going up. It's not even hitting my pending, but it got into some buys there, right? And then I'd do the same thing where I'd have a stop loss here because now it crossed that. I'd get into my sells for my buys, might take a loss on the buys because it triggered, came back up, felled the 50 of that. So you should get back in, right? Because it felled the 50 of this, you should get into sells right here off the felled 50 of that event. Coming down here, it gets you into pending orders. If you happen to catch the move right here, this is where you should put sells on a felled 50 event. Pulls back, fells the 50. That's what we do on the 1 minute chart. If you catch that, that's where you should enter into sells. I'm just saying when you're trading larger time frames, you may or may not catch it. You could put alerts out there where when price hits that, all that kind of stuff. But if you happen to catch it, this is truly where you should be selling, right? The felled the 50 comes down, it crosses this. You should secure your trade right there. Now you're in the money, and this is where max profit is right there, right? So, and that's the same thing, same exact same thing on the 1 minute as it's doing on the hour. It's following the same principles of the 3 and 50. So it comes down, we'll see right here. Boom, got you at max profit. Now the decision, if we're following the same thing, we're at the bottom. Now we're saying, is it going to break this channel or is it going to bounce off the channel? For me, I'm probably going to play the bounce and assume that this is the apex and start buying off of this bounce to at least. So I buy here, comes down to here, buy here, and then max profit right here, which is less than 50% of this move. But I'm thinking it's going to come down a little bit more and make this area 50%, right? So I don't know. Let's see what it does. Or it could turn, but I'm buying right here off this bounce point. So there's the turn. I put half of my position on. It came up and that hit max profit right there, right? Same thing. It failed to break. So there's another entry for sells coming down here. How many times is it touching? Well, you don't really do the 1, 2, 3s on the 1 hour, right? So usually if it comes down and touches, you just do the 0, 1, and then I usually will take the 1 or the 2, depending on if it's combined with an M or a W, right? So here it came down and touched this. Again, you can get back into sells right here, but now I'm getting back into buys right here, and I'll put a pending order of buy right here, pending order buy right there. And I will ride this up to 50% of this move, 50% of that move. That's where my take profit is. And if it eventually, I'm thinking maybe it's going to blow past that 50% and stay with this channel, but I'm going to at least take it to 50% and either prove me wrong it or look for max profit at that point. So here we go. Select and we'll see what happens. So right there, it came to 50% right there. It got me out on this candle right there. And now, because of that big wick right there, well, I guess it's kind of cheating, but because of that big exhaustion bar and came all the way back down and rejected that, I'd be looking for sells because this got rejected. And now we're on the other side of here. So I'd look for the market to come back down to here. And if it crosses this, I'd look for it to come to there. But this is the next bounce point where I'm probably going to be buying off of this point. So let's see. I'd probably buy if it comes down to there or here. This is a bounce point, an action point. I'd probably put half of my position here and then half of it when it comes down to here. And then add into that position if it came down to there. But let's see if it curls up and fells the 50 again. And it doesn't. You see that? It blew. I would expect it to not fell to 50 at some point and blow right past it. And then this becomes max profit, blows right past that. This becomes max profit, blows right past that. Well, now it's crossed the 50. Let's do this. It's crossed the 50 of this. So because it's crossed the 50, it's most likely going to come up and touch this, but it's going to have a pullback of the 50 here, and a failure of that 50, which is right here, means that it's going to have continuation to go up to there, right? So then that's exactly what it should do. Have a little bit of a pullback if it's going to have the continuation of its journey. Or there you go. Came up, hit it, gave you max profit, came down, fell right at the 50 of this move, which we just talked about. It made this the 50 right there, fell that 50, and then just shot up. So again, the 3 and 50 method doesn't matter if you're trading the 1 minute chart, the hour chart, the day chart, the month chart. The market moves to price action. It just moves to price action. And that's what I'm teaching. That's what I'm trying to show you guys every single day. But on the 1 minute chart, we can learn to read and react and embed that so much faster than we can on a larger time frame. Larger time frames are easier to trade because you can set it and forget it. Scalping is the hardest thing that you guys could ever do as a trader. So why do it? Why put yourself up against something that is the most difficult thing to do to make money trading?
Fastest way to learn.
But are you learning?
Yeah, it's challenging. We like a challenge.
I would probably push back on that comment, Duke, not to you, but to somebody that says the fastest way to learn. It's also the fastest way to make mistakes and strategy up and let the market teach you. It's the fastest way to get yourself into the learning trouble. If you're learning it wrong because you're letting the market teach you, it's also the fastest way to develop bad habits, right? And so there's two coins to that, or there's two sides to that coin, right?
Yeah.
So what else? I'm gonna let my dog out, guys. Throw some comments like that. Why do we sit here to try to learn how to scalp every single day if everybody has said, and I'm saying it, and I certainly agree with them, where scalping is hard? Because people will say it's like gambling. And it is. So psychologically, it is. From a psychological standpoint, it has those addictive properties to gambling that you have to overcome. And if you even gambling, like professional poker players, they're not gambling anymore. They have a system, they have a method, they've resisted that greed, they've overcome the what people do when they sit with the normal person comes and sits down at the poker table and just hopes they win, right? A professional poker player isn't going to play against somebody like that, right? Because they can't predict their moves. Of a brand new trader is so unpredictable, they're not going to, a brand new player, they're not going to play against them for their livelihood, right? Because it's like playing against the market that's 20%. You know, play against somebody that's new and it's like, oh, is this a good hand?
Well, what Mark Douglas says is each trade is random and you're playing probability, but over a series of trades, it becomes more probable.
Exactly. That's a great point, right? So I didn't leave you guys on that question. Why is it that we scalp every single morning, every single day? You got immersion learning,
It's learning how to
capital.
risk manage, right? While the trades are going against
Mhm.
you and how to fix it.
Brandon says greater yield, stability, and methodology. Long-term benefit is the ability to trade the market anytime, any instrument. I agree. Faster learning curve, gratification. I think Eagle, that is a very, very important statement to reference, is if you can scalp the 1 minute, you can trade the higher time frames as well. But we don't. I mean, I do overnight. I just take the same exact concept and put it on my overnight trades, right? And I tell you guys to do the same. And then they're like, well, what's your overnight strategy? Well, it's the same thing as the 1 minute, just fewer trades, right? But getting to this point means that you can get there a lot faster on the 1 minute if you're doing it the right way, right? And again, I'm never, ever, ever, ever once said that scalping is the only way to trade. Okay. What I have said, and I will continue to say over and over and over again, is here are the rules. Here are the rules that the market tends to live by. And I'm going to teach you that there's 80% and there's a 20%. And if you can understand the difference between what the market should do and learning to recognize when the market does something that it shouldn't do, well, you're in this market and you need to get out. And as a trader, this grows of how many markets that we can handle, which is our 80% of what we can trade, right? Which is our personal 80% of what we can trade. When we open up a market, we're like, we have no idea. We're not communicating. We have no idea. That's a 20% market for you as a trader. And as our rules and our skill sets increase and we understand the rules, our knowledge to trade different market structures enhances and changes with that. But the thing that I am providing for you guys and I'm trying to teach you guys are the rules. And just circling all the way back to the beginning of the conversation, I'm not anymore, but I was just simply amazed by the people that profess to have 3+ years of trading, didn't understand the rules of price action, right? And I'm not confused by that anymore. But the first, I was like, well, what do you mean? What do you mean you don't understand how to read the KPIs? What do you mean you don't know what a PTP is, right? And we've coined these phrases, key price indicator and proper trade placement. What do you mean? You've been trading for more than 3 years. What have you been doing, right?
We weren't taught those things. You are the one that I saw who really put it, gave it structure. We can see.
But they're not necessarily things that.
You're the one who gave it structure.
I'm not the only one that is teaching it. It's not something that I pull out of a magic hat. Does that make sense?
I know, but I'm saying for me, for all the time I've been exposed to this, you're the one who gave it the structure. And that's how I learned, from the structure. I can say, well, this is what here is called, what do I do here?
The only thing that I've added, Cliff, and I appreciate what you're saying, but the only thing that I've really added is just my own terminology, right? PTP, KPI, action points. And I do that to help reinforce those. But everybody out there in the world of YouTube or whatever will say, this is support, this is resistance. And I say, it's an action point. It's an action point. And the reason why I call them action points is to get you to remind yourself that there's 3 things that you need to do in an action point. Right. And so I changed them up to my own verbiage to help you guys learn. Is I don't say this is support and resistance. What are the 3 things? I say action point to remind you to take action here. Right? Here's an action point. Here's an action point. Take action. Right. KPI, key price. Where is that key price? That if it crosses this key price, it's going to have continuation. If it bounces, it'll have a pullback. Where are those? That's everybody else under the sun teaches the same information. They just call it pivot points or different things like that.
I'm going to jump in there with Cliff.
Terms, but there's no understanding. You can teach it and give all the terminology, but if there's no understanding, then you don't get anything from it. It's like learning a language. You can know all these terminology and know all these vocabulary, but if you can put it together to make sense, to put a thought together, then you still don't learn the language.
Absolutely.
I get beyond that. Joseph, what were you going to say?
I'm saying I agree with Cliff. Man, you turn it into an understandable trading process and how to read it. Yeah, everybody has, take it here, take it there, shows you support and resistance, all the patterns and all that other stuff that you need to know but they don't teach you what you've taught us or me for sure. Why is this significant now? The difference between an action point and a KPI. Sure, they're at support and resistance, but somehow you framed it that it makes sense.
Yes, I understand. As I said, you can learn a language, you can learn all the vocabulary of a language, but if you can't use those vocabulary, put them together for a complete thought, you haven't learned the language, even though you know all these vocabulary.
Okay, so I appreciate that, and that's honestly the difference that I'm trying to do is just take what's being taught out there and build a learning model right off of it. I'm not trying. The point that I'm trying to make is I'm not trying to reinvent a wheel and present to you guys a completely new strategy or a new technique or something, and I'm not bottling it up and saying that here's the latest and greatest strategy that's going to guarantee you an 80% win rate. Buy it here, buy it now. That's not what I'm trying to do. What I'm trying to do is teach you how the market works. And once you understand how the market works, then you can decide how you're going to trade the market today, whether it's on the 1 minute, the 5 minute, the hour, the month, whatever, the principles still align. I mean, just case in point, looking at this 1 hour chart, now that I understand the 3 and 50 model, I see it everywhere. I cannot not see it, right? Where this moved right here, this move, the overall move, this is 50%. It fell to 50. Oh, got to sell, right? Even the smaller moves right here comes back in this box right here. It crossed over the 50. It's going to the top, come down, crossed over the 50. It's going to the bottom, right? Crossed over the 50. Look how many times it's crossed the 50, hit the top, hit the bottom. And then you got your 1, 2, 3s, all that in play. And the more times it touches the bottom, 1, 2, and then this is your second touch right here. It's going to break out. You're looking for a breakout. Well, which side is it going to break out? Right here, right? And then it gives you this big, long move right here. Here's a 50%. There's a 50% of that. Fell to 50. We're going to get continuation. Comes down, finally comes all the way down to here. 50% of that move. Fails to 50. We're going to get continuation. Oh, there's another 50. Fell 50. Going to get continuation. You see my point? Oh, at some point, it's going to blow past the 50 and go to the 50 of this move right here. Oh, it did that. Oh, look, it came down to the 50 of this move. Oh, wow, it did that. Oh, look, it came back to the 100% of this move right there. bounced, fell to 50. Oh, fell to 50. Well, what should it do? Well, it probably should go up. Oh, look, it crossed here. Now we got to look at the 50% of this move right here. This is my max profit, 50%. This is on the 1 hour time frame. It's no different on the 1 minute time frame, right? It's doing it. And I can pull this on any time frame, and I can start to see where the market should go, what the market should do. The times where it doesn't do what it should do, which is like here, right? Because it dropped down, it didn't even see the 50, it just came all the way down to 100 in like 1 hour. It shouldn't do that. It doesn't typically do that. This is a 20% market, right? But I'm probably going to say there's news in that. I don't know, but that's probably what I would say. News is definitely 20% market. You have no idea what it's going to do. But are you starting to see why the 3 and 50 is so important to understand? Once you see it, you can't unsee it, right?
The biggest thing I'll say is that it's active managing your trades, right? Because you see the 350 if you keep watching it. What like Cliff and I learned with OTA, Online Trading Academy, it's passive trading. Like, oh, here's a zone, you put on a sell, and then oops, you got knocked out. And saying, okay, well, you sell like here, and then your target's somewhere here.
Yeah.
It takes, forever to reach those, and then you don't ever see when it stops panning out. Like if you were in buys right here, well, the next time it comes, like 0, 1, 2, 3, it's not going to work. But if you saw it bounce here and you put a buys, yeah, it worked, right? And I think that's really the biggest thing is as the market develops, your probabilities change. And I think that's the biggest thing that we learn from, APR and from Trade the Fund is actively managing your trades instead of.
Well, I think you hit the nail on the head for something, and I'm gonna ask. I'm not gonna say that this is an opinion, not fact. Anything that I teach you as far as the 3 and 50, I truly and honestly believe that is just how the market works. It's price action. It's not Dave's philosophy. It's not Dave's strategy. This is how the market works. You can't refute that. However, what I'm going to say right now is opinion. And I would like maybe if you guys agree or disagree, I'm just going to open up to the conversation, but it's how I feel right now. And I'm open to being changed, to my thought process being changed. But my opinion is that most companies, most of the education that's out there that is being taught, whether it's through YouTube or through a paid service or through anything, is that most education focuses entirely upon your entries, and focuses entirely upon your entries, and
Not
their
your
exits are very simplified in saying they'll tell you a risk reward ratio, right? So if it's like a 2 to 1, it doesn't really matter as long as you hit the 2 to 1 or whatever.
Yeah.
And so they'll either say it's risk reward ratio on your exit, or they'll say a dollar amount on your exit, right?
Most is
Like-
3 to 1. Most is 3.
So what I've been noticing is that they won't tell you where max profit is
No,
on that trade,
that is true.
right? They won't tell you where max profit is on that trade because they don't know, or they're aligning themselves to, well, every trade's different, so I can't tell you, which I think is another cop out, because I could tell you where max profit is so that you could start to identify it yourself. Max profit is wherever the action point is or the KPI. That's as simple as that. That's your max profit for that trade. But do we get out at action points? No. Once it crosses that action point, that's where we enter our prove me wrong.
Yeah.
Do you know what I mean? Give me more. If you have more to give it to me. Right? But that's why we call it prove me wrong, because we've already hit our max profit for that trade. And we're identifying that now if the market has continuation, great, but it shouldn't. Right? It shouldn't have that continuation, because we're starting to understand what the market should and shouldn't do by understanding where a max profit is on each and every one of our trades, right? And so again, going back to opinion, I think the education out there is focused on entries and not enough on the exits. And I think that the entries are easy, personally. That's why the edge focus is here and exits are hard. Because exits have to battle psychology every time you exit, and you have to get over that, oh, I'm doing so good, I don't want to close out, or finally it got me back to break even, I'm closing out. Each one of those responses is psychological. And exits are the only entries do not come with psychology. Exits do. Right? And that's why I don't feel like a lot of people out there teach how to exit your trades.
Well, they teach the 3 to 1, because they're saying if you're risking $2, you're risking to make $6. And so with that, take that little concept, you can win 33% of the time and lose 70. But if you're going the 3 to 1 ratio, you will always be profitable. That's in a nutshell.
Sure.
They teach.
But let's just take this case in point. Let's say that I decided to sell off of here, because this is, a failed 50 event, so it got into sells, right? And I decide, okay, I'm going to put my stop loss here. So, and then I'm going to go for a 3. So if I take this, we'll just do this right here. Thanks, Dick. You probably just did what I was going to do. And I was just going to do it more sciencey. Right? So that's my risk. That's my 3 to 1.
Yeah.
Right? So here's my reward, right? It's coming down to here.
And
So-
that's your target.
Right. So this is the problem of what's being taught out there as far as exits. Again, opinion.
Exactly.
Opinion here is that you're okay to hit your stop loss here. But if you're looking at the KPI, this is truly where max profit should be,
Yeah.
right?
Mhm.
Is here because of the channel. And it blew past it.
Then you start
And
securing.
if it blew past it and it prove me wrong, then you secure it. And then it crosses here, you secure it again, but it probably is going to knock you out right there. But if I have a 3 to 1 risk reward ratio on, I'm losing on this trade.
Yeah.
Do you know what I mean?
Yeah.
I'm losing on that trade because I don't understand that my max profit should be there.
Yeah, exactly. That's the exit.
Right? Or that proved me wrong, but you would have gone out on that big candle or get back in on that big candle and sell it down, right? But even still, if I believe that it's going to come down to this point right here, then my max profit is before it touches that point. And then if it's going to come down to this point, my max profit is before it touches that point. Because I don't need it to touch in order to take me out, particularly true on the 1 hour, right? And they're not going to come to those touch points. And so you need to have yourself larger time frames. But that's where I say exits are more important than entries to master. Because entries, I can teach anybody where to enter in a matter of moments. Exits, it takes a lifetime to understand because that is intrinsic upon the trader.
Yeah.
Right?
Yeah. Depends on
It's-
skill to secure.
And so that's why I think that it's a blanket statement that the industry uses as what's your risk reward statement, but it's not the accuracy. But that doesn't get you an accurate, just trading a 2-to-1 risk reward ratio, right? Because your stop loss should be here, but if it's a 2-to-1 risk reward ratio, maybe my stop loss was here. And maybe my take profit was here. Do you know what I mean? Who knows? Anyways, I know that's just opinion personally that a lot of people out there don't talk about the exits. And I think the exits is what makes you a level 1, 2, or 3 trader, is mastering your exits. Honestly, that's the only difference between a level 1, 2, and 3 trader is you've mastered your exits. And you have the ability to take exits at a loss and it doesn't phase you. You have the ability to maximize your profits and it doesn't phase you. That's the difference between a level 1, 2, and 3.